Hello, neighbors. A big topic in metro districts is the high property taxes. But property taxes in general can be a little bit complicated at first. We get these statements in the mail, and they have small fractions, mill levies, assessed values, and frankly, it's just not self-explanatory.
Why don't you explain this to me like I am an 8-year-old?
I decided to finally dig in and understand property taxes. And hopefully, this will save some of you a lot of time who've also put off this chore. If you watch to the end, you'll be a property tax expert.
Oh, yeah!
And not only will you be able to calculate property taxes, but you also see a comparison between Thompson River Ranch property taxes and those in other neighborhoods in Loveland and Johnstown. And there's a big difference. To calculate your property taxes, you simply multiply the value of your property by the assessment rate, multiply that by the total tax revenue from all properties, divided by the total assessed value of all properties, and voila, your property tax.
Do you understand the words that are coming out of my mouth?
And this can be simplified to assessed value times mill levy equals property tax.
All right, explain this to me like I'm a 2-year-old, okay?
I needed to understand a few concepts before this made sense to me. First, annual budgets. Then actual property value, assessed value, and mill levies. The annual budget needed to run a county, a city, or even a school district are collected via taxes, including property taxes. They essentially take the total budget for the year and spread it across all the properties in the county or town or district. They use property values to decide how to split it. Properties worth more pay more, but everyone pays the same percent of their property value. The appraised or actual property value comes from the county assessor, who's tasked with establishing fair values for all the properties in the county. In May, you got a notice in the mail telling you the assessed value for your property.
You got mail.
And you can contest this, but in 2023, the property value increases were historic.
Property values in 9 metro area counties saw an unprecedented spike today.
Homeowners should expect their property taxes to increase by 40 to 50%.
We've never seen, I think we would all agree, something this historic or unprecedented.
County assessors are sounding an alarm about what is shaping up to be the biggest tax increase in Colorado history.
There's a lot we could say there, but that's outside the scope of this video. An assessment rate is used to convert your actual property value to a smaller number that will be used to calculate your property taxes. Now, in the past, there were rules about this rate which limited the amount of property tax increases you could get. But in 2022, Colorado voters repealed that rule, meaning property taxes can increase without limit.
Did I do that?
In 2022, the assessment rate for residential properties in Colorado was 6.95%. So you can take your actual property value, multiply it by that 6.95% to get your assessed value. Now for the average home in our county, that comes out to about $34,000. You can calculate it for your own property values using that rate. Now the last piece is the weirdest, mill levies. Let's say that a county needed $155 million for the year to run the county. And the total value of all properties in that county was $100 billion.
$1 million.
Not quite.
$100 billion.
There it is. Using that assessment rate, we cut that $100 billion down to $6.9 billion. Now the last step, we take that budget of $155 million and we divide it by the $6.9 billion. And we get this really small number. That small number is the tax rate. What that means is that for every dollar of property value, you will pay that amount. In this case, it's about 2 cents. To make that small number easier to talk about, they move the decimal over 3 places and call it a mill levy. So in this example, the county has a mill levy of 22.436. But I still got hung up on those 2 words, mill levy. Like, what do they mean? So levy means tax. That makes sense because this is the tax rate. And mill, it's not for million, it's actually Latin for 1,000. Much like cent is Latin for 100. Think centimeters and millimeters or millennium. I think of it this way. We call a penny 1 cent because it's 1/100th of a dollar. If we had a smaller currency than a penny, we would call it a mill. A mill levy of 1 means that for every $1,000 of assessed property value, you'd pay taxes of $1.
Now you know the rest of the story.
With this information, you can understand your property taxes. Congratulations. There's a mill levy for the county, for the town, and for every district that you're a part of. Total all those mill levies up, and that's your total mill levy. Multiply that by your assessed value, and that is your total property taxes for the year. And you can look all of this up for your property or anyone else's property online here. Now let's compare the property taxes for a metro district versus a non-metro district using what we just learned. We'll compare a $500,000 home in Thompson River Ranch to $500,000 homes in neighborhoods without a metro district. While there are some variance between counties and towns, the huge difference is the metro district tax, which is substantially higher than the HOA fees in other neighborhoods. These other neighborhoods don't have a pool or as much open space as Thompson River Ranch, so we should expect a higher amount. But does that difference shock you? I hope this overview of property taxes was helpful. If you want to see a deep dive video on where the property taxes for our metro district go, let me know and I'll make another video. Thanks, Thompson River Ranch.